I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers Podcast. Welcome. Today, we are talking about, mortgages. If it's not your primary residence, there's two different types of other financing we do. It's second homes and investment properties.
That's right. We, like most professionals in the industry, get so used to hearing certain terms that, we can throw them out and just assume everyone knows what we're talking about. But, it's like going in and get your brake pads done and the guy's talking about a caliper X versus a caliper Y, anyway, you got all these things.
Yeah.
So we talk about second homes, and Ed, you just had a really good, simple scenario pop up as to a second home to one person is not a second home to another.
Yeah.
So, anyway.
I mean, this, Tom and I were looking at this podcast going, okay, what is our whole point here? I mean, people call us and they were asking a question that a borrower recently asked me this week. I'm buying a house here in the Valley and my son's going to live in it. I'm not going to charge him any rent. I want to buy it as a second home. Well, he can't buy it as a second home. And
right.
In his mind, he's like, what? Why
yeah.
not?
Well, wait a minute. It's called a second home.
Yeah. I have my first home and I have a second home.
And I have a second home. And if I had
I'm not renting it. So why can't we just call it second home?
And if I had another son that needed a house, I would want to get a third home. So anyway, yeah, it's just very, very simple. So yeah, so we're really focusing on second home versus and investment properties. We will, sprinkle in some primary homes, but yeah, it's second versus investment. So
that's right.
Okay, so just general parameters of a second home versus an investment property. If you're an alien and you just landed on this planet Earth, what would you tell them a second home loan is?
Okay, a second home loan is for someone who is going to be occupying this home part of the year.
Part of the year.
Part of the year, not the majority of the year, just part of the year. We just say, 50%
part of the year.
less.
Okay. For any varying, reasons. It doesn't have to be weather. We automatically assume second home, weather, the heat.
Yeah. We live in Phoenix, Arizona, and there's a big valley, 4 million people here in the valley, and people escape up to the north, and there's cabins and second homes up there. So vacation homes are where we, in our market, that, if we're going to do a second home, it's usually people who are moving up north, getting out of the heat.
Right. Okay.
But if you're living in the Midwest, East, West, the California, Northwest, it's different.
Right. Totally different. Okay. So we could say that the most basic second home is someone who would occupy it less than their primary, actually probably substantially less than their primary, because most people work and live in their primary home. But when they have a second home, it would be considered kind of a place of leisure. It would be another place that you would go to for a small part of the year. Typically it's for weather. So whether you're moving from cold into the hot regions, like Ed said, from the Midwest to Arizona during the winter.
Yeah.
Or
if you're in the Midwest, maybe a lake house or something like that. It has to make sense. You're going to have to write a letter explaining why you're buying this place, why you're making it a second home. So you do have to explain what your intentions are, and it has to be believable.
Right. Okay, so let's just push the envelope a little bit. So what happens if it has nothing to do with vacationing and it just has to do with maybe taking care of a grandma?
Yeah, that is fine. In Arizona, I have borrowers who've purchased, they live in Phoenix and they have a family member in Tucson and they visit that person.
Mm-hmm.
They may have one person actually commute.
Mm-hmm.
They have a second home there and they actually live there a couple days of the week. But yeah, if you're taking care of someone, but you cannot buy the home. If you're in Phoenix and that's where you live and your grandma lives, 30 minutes away from you, even an hour away from you, you can't buy a house next to her and call it your second home.
Right. Okay. What happens if you're in Washington State and it's just colder than heck and you're thinking, you know what? Some friends of mine bought a second home in Phoenix, loved it. Why don't I buy a second home in Phoenix, stay in it for a couple of weeks, but rent it out? I turned this baby into a rental. Yeah, it's a second home, but you know what? Why don't I just rent it? So, and I don't know if I'm leading you down a complex
It probably gets a little bit
answer.
more complex, but I would say that as long as you're occupying it, if you're doing an Airbnb partially during through the year, what's
Yeah.
important to me is, are you taking advantage of that home and living in there part
Right.
of the year?
So how about this? It's the intent. Okay. If you intend to occupy it as a vacation home, what you do with it on the other, remainder part of the year is fine. But if your intention is to call a lender and to tell them that you want to get second home, when you're really going to be, renting it the entire time,
Mm-hmm.
that's when that stuff can become, or it just ends up biting you. So, okay. So we've kind of talked about the second home, investment property. What is, the same alien lands on, on this planet Earth and says, Eddie, what is an investment home? What is an investment property?
I'm going to say any property that you do not live in. Okay. So you don't occupy it. It's a house but typically an investment property is a home that you rent, but it does not need to be rented. Again, back to our scenario, you can basically let your family live there.
Right.
If you're not living there part of the year, it's an investment property from our view.
Right. So very, very simple. Primary home was one that you occupy, a majority of the time. Very typical. 95% of all Americans, 95% of all people that have home loans are probably in a primary home.
Right. So everyone's familiar with these primary homes or loans.
Mm-hmm.
There's only two other types of loans: second home and investment property loans.
An investment property. Okay. And then on the second home, can a second home be multi-unit or is it just one unit?
You can do multi. Yeah. And
it's rare.
Yeah, it's rare. You can have a multi, up to 4 units on a primary residence.
Mm-hmm. That would be a hard sell to the underwriter, but you'd have to really, really convince the underwriter that there's a reason that you're staying in one of those units.
Yeah.
For a portion of the year. So I would not get real cute on that, but you could do that on an investment property. Can it be multi-unit?
Yeah, absolutely.
Mm-hmm. Up to what? 4 units?
4 units. So everything that we do in the residential world is 4 units and lower
or less. So I just got a borrower that I helped previously, and her brother needed a 8-unit complex. And I said, unfortunately, that's going to trigger the commercial financing, which is a little bit more expensive.
Yes.
But residential is 4 on down. FHA can handle that. The VA can handle that. Conventional can handle that. So that's great news, everybody. 4 units for an investment property. Holy cow.
Yeah.
Nice.
So let's just go right through a couple questions right now. And let's just, if we just label this second home mortgage rates versus investment property mortgage rates,
mm-hmm.
I mean, what's the difference? The baseline, your primary residence that you live in. Now,
mm-hmm.
a second home, is it different than a primary?
Typically, it's going to be very, very close to what a primary is.
Yeah, there's only a couple little adjustments, but usually it's the same pricing.
Mm-hmm. Now, when it comes to investment properties, what are we seeing there?
Well, in a typical market, the interest rates on an investment property about 1% higher than a primary residence. Now, that's a typical market, a market where the banks are comfortable. If you're in a market where the banks are uncomfortable, recessions, pandemics,
COVID. Yeah,
COVID. Right. Banks will actually make that delta, that spread, higher. Right now, you'll maybe see 2%.
Now, why would they do that? Why would they go higher? Why wouldn't they go higher equally? Having everything rise versus why would you just have the investment property go up?
There's basically when markets are unsure, the risk is higher on the investment properties. If the market all of a sudden took a crash, borrowers are going to dump that loan, or the first thing they're going to dump is that mortgage. Yeah, before they actually foreclose or go late on a primary residence, they're going to go late on a investment property.
That's exactly right. So that's one very, very important nugget to understand, is that there is some subjectivity in the pricing world of the investment property. And it's really because if stuff gets bad, those are some of the first products that end up, or first properties that end up going.
Yeah, if the tenants stop paying, you lost your job, all of a sudden it's that mortgage on that rental property that's going first.
Right. And then, so we've got the primary versus secondary versus investment property. Now let's throw in a product type or property type, single family versus condo. you have a condo, which is a little bit higher risk than a single family. You have a condo investment property. Those can be expensive. You
Yeah, those
almost
are
get
definitely.
you can get a double hit there. So you have
Yeah.
loan type, which is occupancy type,
Hmm.
but now you have property type. Like, what is it? Is it a
Yeah.
townhome? Is it a condo? Is it a single family?
And if it's a fourplex, when times are uncertain,
Mm-hmm.
sometimes banks will just say, we're not doing fourplexes anymore. We're not
Right.
doing three, we're not doing three and,
Right.
duplexes. But anyway,
Right.
it's a way that banks will, that delta between the primary residence interest rates
Mm-hmm.
and investment property will change.
Okay, so you hit on something. So you're telling me the second home financing is about the same as primary,
Yes, most of the time
and
it is the same.
and you're telling me investment property financing can be 1% or higher in interest rate. So you're okay. So that's why people can get a little bit cute about how they call their property.
Yes, a lot of it. Yeah, and a lot of people don't. Sometimes people know that they're doing that. Other people don't. You know.
Right. That is
You
true. Let's
know.
just give them a let's just give
Well, let's say the benefit of the doubt.
the
I mean,
benefit of the doubt
if some
to
guy
most
calls
people.
in and if they're pretty savvy, they'll know that an investment property is a higher rate, and they
Mm-hmm.
might try the whole, "Hey, I'm going to buy this property as it is second home."
Right.
But you
Right.
can just kind of sense immediately just by the questions and
Yeah.
answers if
So how
they're going
many
to rent the thing.
Right. So how many properties have you purchased in the last 24 months? 4. Oh, how many of those were second homes? Well, 2 of them were. And then I
Right.
converted the other 2, into investment property.
Yeah.
Now here's one that's really interesting. How about this? And I'm going to throw you a curveball because you might not be ready for this. But can you have multiple second homes?
You can.
You absolutely can.
Yeah.
Because the idea is the definition of a second home is a home in which you are going to partially occupy. If you love to sail and you were to buy a home in Baltimore, that could be a potential place where sailing is great. I don't know if sailing is great in Baltimore or not,
I
but
don't know, but let's just say Phoenix. People can go to San Diego, which is 5 hours away, or
Mhm.
Flagstaff, which is 2 hours,
Yeah. So
3 hours
so
away.
so
You can have
let's
a second home both.
that's right. So you have a forest second home and you've got a beach second home.
Yeah.
So and there are some loan officers that don't even know that. Um, but yeah, so you can have multiple second homes. I thought that was very, very interesting.
Yeah.
All right. Anything about the DTI or the LTVs or the down payments we need to talk about?
Well, debt to income ratios, that DTI, the debt to income ratios are going to be more restrictive on investment properties and second homes. Okay, in general, and of course, the second homes are going to be a little stricter than a primary residence, and an investment property is stricter than that.
Mhm.
Now, I
But
cannot
not
quote,
by much though
but
on the DTI.
yeah, well, it could be. It depends on the entire picture. If the borrower has, it depends on their credit and job history. The underwriting that's done on files today is through automated, like basically artificial intelligence. An
Mm,
algorithm.
yeah.
Basically, it's an algorithm looking at the full credit file, all the credit report, the borrower's income history, and it's making a
So
judgment. So for some borrowers, it will it will say their maximum debt to income ratio is 35% on an investment property.
right.
If you
Okay.
have
So
excellent credit
right.
assets, maybe you can go up to 40, 47.
Right. Okay. So I guess what all that means is if you're in the top tier borrowing group, you're basically going to have very little difference between the debt to income ratios. Okay. So that's the DTI between primary, secondary, investment property.
Yeah.
When you get into the lower tier, what we call loan groups, those DTIs are going to be more sensitive. So keep that in mind. Okay. How about LTVs?
Yes, the loan to value, the LTV is something that. Okay, so let's just go over. Primary residence is 5% down,
Mm-hmm.
so that is
Sometimes a little
okay.
less in rare
Yep,
situations, but for this purpose, okay,
it's
5.
5% down. A second home is 10% down requirements,
Okay.
and the investment property, the minimum down is 15%. It has mortgage insurance. So in most cases, we say
Mm,
20% for an investment property. But again,
mm. 15%,
that's where it's
right?
at.
Single unit. And then what is it for 4 units?
25%.
25%. Okay.
Yeah.
So all of a sudden you're starting to paint this picture, and I guess it's better just to stick with 1 unit for right now, but it's 5% down for primary, 10% for second home, 15% for investment property. So not only is the interest rate pricing substantially different than a second home, but also your down payment is. So it's really important for borrowers to know what they're getting into. Are they asking for an investment property? Are they asking for a second home? What is the intention? And working with a good loan officer to help you, navigate through that, because there's some big difference between the second home and the investment property. They can look and feel totally alike. You can have one home and then the home right next door to it. For one person, it's an investment property. For another person, it's a second home. And for another person, it's a primary. Yeah. And again, same model, same street, right next door to each other. It all depends on your scenario.
Whether you're getting a second home or an investment property, these are going to be conventional loans. There's no VA loan or FHA loan that is a second or investment property. These are conventional loans, and they all require a minimum credit score of 620.
Okay, can I throw out one exception? You could potentially have 2 fourplexes go VA and have those both be considered primaries. Yeah, you could do a primary secondary, or a primary home and then a second home, hypothetically speaking, for the VA.
The VA does not have, the VA is not going to have the second home status.
Right. You'd be buying it as a
primary.
As a new primary. So you could have a VA loan on an old fourplex primary, and you could do a new loan on a fourplex as your new primary.
Yeah, so and they'll let you keep that old loan as a second home. They'll let you keep it as a second home or a investment property, but anything that you're buying has to be primary.
That's right. Yep, that's right. Okay. What else? We talked about DTI. We talked about LTV. We talked about interest rates. Does it depend on who can actually buy secondary homes? Are there limits? We can't discriminate with age. Whether there are age limits, are there? Do you have to be sophisticated to buy an investment property?
Nope. No. I mean, we can get into some of the underwriting rules, but I think if you have landlord history of 2 years or more, that's great. You're going to be able to qualify for more. With history, because a lot of the underwriting rules, when things get tough or the banks are unsure, what they'll do is they'll start making adjustments and saying, if you don't have landlord history of at least 2 years, you have to qualify for the full payment. We won't give you credit, for example, for the income.
Right. Some people are moving out of their primary home and they want to turn their primary home into an investment property. So they're actually moving into a new primary. They want to convert their old primary into an investment property. Can they get credit for that income, for the old primary? And some of that has to do with landlord experience. So, okay. What else?
Okay. Well, I think we've gotten through everything that we really need to. Again, I would just say one more time, the credit score requirements are 620 in the minimum. Again, if your credit scores are low, you're going to have higher interest rates. So everyone should probably just be very aware.
Can I throw this out? So in my little brain, I think about the different loan programs: primary, second home, and investment property in 2 different buckets. In one bucket, I view it as pricing. What is the delta in pricing? Okay, and what can we do to get our borrowers the best price for the intention of that home? The other bucket, and this is kind of interesting, and I think we could call this the stair-step approach, that as long as you're going downstairs, as long as your occupancy is getting, what would we call it, more restrictive, you can always do that loan. Meaning, if I'm moving into a primary, I could do an investment loan. Chances are I could even do a secondary home. But to go the opposite and say, I'm actually buying an investment property, but I want it to be my primary home, you can't do it. Does that make sense? So in our minds, we've solved a lot of borrowers' problems. They're moving from Nebraska to Arizona. They're buying, they're selling one primary, moving into a new primary. Yet because of their scenario, they're not allowed to have 2 primaries. So we say, let's just stair step this, and let's call the primary a second home.
Yeah, that's one scenario that we actually never really talked about. Is very common. If someone's retiring soon, they're kind of planning their retirement. They're going to be moving to Phoenix from New
Mm-hmm.
York.
Mm-hmm.
They might be doing it in a year or two or whatever.
Yeah.
They buy this home, or they're going to be, whatever. They're buying this as a second home. We basically will put together a strategy of buying this as a second home.
Right. When in actuality, right, it's going
may
to be
be
a
their
primary.
primary.
Yeah.
It may be their primary very soon.
So I guess another way of saying this is you can typically, okay, there's always exceptions to every rule. You can typically do a second home and investment home if it is a primary. You can typically do an investment home if it is a secondary, but you can't go the opposite. You can't call investment properties second, homes and primaries. Hopefully I'm not screwing, or messing up the audience.
Yeah. Well, I think that I think in general, I think that did come across. So anyway, anyone has questions on that, let us know. There's this last idea of, how do you avoid higher interest rates on an investment property? People will ask, hey, how do I, those rates are so much higher. How do I get them down? There is as long as you put more money down, it does go down a bit, but there's really, you have to put at least 25% down to get the better pricing, the best pricing.
Mm-hmm.
And then just additional points. But
yeah. And let me just throw something there. So yes, you can get the pricing down. The typical investor we see likes leverage. They typically want to leverage their money, which means put as little money down and borrow as much as they can so that they can replicate that.
Yeah.
So though the pricing is better, keep in mind if you yourself are a young investor or starting out in the investment world, you'll learn cash is king, and whatever you can keep in your pocket is worthwhile. So a lot of our investors don't go down that road, but that's definitely an option, especially if you're looking to buy an investment property that's for a family member because you couldn't qualify as a second home, and you're keeping it long term and you want to get that interest rate down. You could definitely put some more money down.
Okay, so right before we finish this podcast, let's just go through a very simple frequently asked questions about rentals. And Tom, I'll just fire away.
Okay.
Are you allowed to have overnight rentals like Airbnb?
Absolutely.
Okay. And are there limits regarding how many nights you can rent?
No, I guess the answer is from a lending perspective, no, we would never tell you how many nights you can or cannot rent. But from a qualifying income perspective, there becomes an issue when we're talking about, vacation, rentals by owner.
Okay. And maybe check with your cities too. The city will have a different ruling, or the community itself may have a restriction.
Right. And this is very, very important. If the for rent by owner property is the subject property, we're going to have issue from a qualifying income perspective because some of these, VRBOs are making a lot of money and we can't count it because the short-term leases cannot be underwritten.
Okay, that's right.
If it is not the subject property, guess what? We go off of tax returns.
Mm-hmm.
And we don't ask for leases. So we're never going to ask you. Typically, we're not going to ask you, how long of a lease it is. So that's a very important kind of vacation rental point.
Right. Okay, so how much time must you spend there for it to qualify as a vacation home instead of an investment property? We actually did answer that before. And it's really just at least less than 50%.
Right.
The 50% of your time has to be, or more, has to be spent at your primary residence.
Yeah.
Second homes just have to be less.
Right. Yep. Exactly. Okay.
And here's a trick question. Another on the frequently asked questions from borrowers. Can you have an accessory dwelling unit?
Accessory dwelling unit defined as what?
Just a casita or a guest house in the backyard.
Of your second home or investment property?
Yeah. And let's say it is someone buying a home and they want to buy it and they want to rent out the back. The casita.
Awesome. Yeah, awesome. But we're just not going to be able to count that income.
Right. I think that people will ask, hey, I'm going to be buying this house. I'm going to do an Airbnb on that thing.
It's going to be awesome.
It's kind of like, hey, I'm getting roommates. Can I use my roommate income? The answer is no.
That's exactly right. You got a 5-bedroom home and you've got 3 roommates.
Yeah.
Unfortunately, we're not able to count that roommate income.
It's awesome that you're buying a place that has a casino or this like detached dwelling unit, but you have to qualify without any kind of idea of
right. And when they ask, well, why is that? Though it's a detached structure, it's still defined and grouped in as that primary home, as that secondary home. So if you're vacationing in it, why is a part of your vacation being an investment property? So that's when you'd end up triggering probably the investment category. Again, you can always step down. If you're really wanting this to be a second home and it's just not being underwritten, just say, forget second home. We're going to go investment.
Right. And if anyone has questions on that, because it can get a little tricky, just let us know. I think we're done. And, we do this every week. Tom and I are answering questions from borrowers, all of these frequently asked questions. And, be sure to like and subscribe to this channel. Put a review out there for us on iTunes or any podcast questions. Email us, please. And anything at all, comment on YouTube.
Perfect.
We'll be there to answer you.
Perfect. And we don't just send out our podcast response team. We actually respond ourselves.
That's right. We are responding to these emails. Our team is right here answering.
Yep.
Okay. Thank you, everyone. Have a good week.
Perfect. Thank you, folks. Take care.
Hey, guys. Thanks for listening to the Mortgage Brothers Show. Please let us know if you have any questions you'd like us to answer on this podcast. You can email your questions to tom@azmortgagebrothers.com or yours truly at eddie@azmortgagebrothers.com. And be sure to ask us for a free quote on your next mortgage. Tom and I will personally work with you and help you through the whole process. Signature Home Loans, LLC does not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. Signature Home Loans, NMLS 1007154, NMLS number 210917 at 1618695, Equal Housing Lender.